Hey traders, Cousin Benny coming to you on Sunday the 24th. What we're looking at here is the S&P 500 three-line break chart. If you're not familiar with the three-line break, basically it was invented in Japan and it ignores time and only changes when prices move a certain amount. Very similar to a point and figure chart. And a reversal only occurs when the closing price exceeds the high or the low of the prior two lines. Okay, so 1, 2 here, we exceeded that, so we have a breakdown. Alright, so this is in March, or the end of February I should say, where we came down and tested the 20 period and we bounced off of it. Also note that relative strength isn't as high as it was in the previous case when we had that bounce in February, end of February. And the ADX, which is a strength of trend indicator, not a directional indicator. So the fact that we came up here and turned over showed that strength was moving out of the market, the strength of this trend, and then we quickly turned back up. Looking at a three-line break chart on the comp, we can see that we hit this upper level area, or almost hit it, and we're moving off of it. RSI didn't quite get back up to 70 like it did back here in February, March of 2012 before we turned down. Okay, and note the ADX as well. Let's take a look at the Russell. The Russell, we can also see that we've moved higher here, same as the other two indices, and a similar ADX turn, and RSI is not quite as high as it was previously. Looking at our sectors, we can see that we bounced off a lot of these levels, the 20 period and the 50 period on each of these sectors. Note the strength in consumer staples and utilities. XLV, if we look at solely the performance against the other sectors, you can see consumer staples have been strong in both the equal weighted S&P sectors as well as the market cap sectors. And note the materials and technology sector both on the market cap spiders as well as the equal weight spiders ETFs are weak. And note healthcare on the equal weight spiders is slightly weaker than the market cap spiders. So what does that all mean? That means we need to keep an eye on the sectors that we're trading this week. So let's look at three-line break charts on the S&P sectors. The XLB, you can see, has already put in a double top more or less, and the RSI didn't make it back over 70. This would be considered a bearish RSI failure swing, where we went up through 70, came back down to 50, and then didn't make it back over 70 again, but fail. XLE, the energy sector, you can see also put in somewhat of a double top, and we're moving lower now on a three-line break chart. Note where the 20 and the 50 period are, as well as RSI, bearish failure swing here as well. XLF made a higher high and a higher low, but we've already started seeing selling in the XLF. We did make it back up above 70 though, so this was a little bit stronger in the past few weeks. Also note ADX is starting to turn over. XLK, where you can see clearly a head and shoulders top, and we're starting to roll over here with another bearish failure swing. XLU, utilities, you can see the strength of trend here is continuing higher, one of the better performing sectors. You can see the volume, and you can see relative strength. So XLU, one of the safety sectors when the market starts to get overheated like the S&P 500 is currently, the comp and the Russell, you would expect this sector to do well, which it is. XLV is looking good. Healthcare being one of the stronger sectors as well. Some of the top holdings are Johnson & Johnson, Pfizer, and Merck. We'll look at those. Bristol Myers Squibb actually had quite a move since we first looked at it several months ago. I just happened to look at the chart this weekend, so I'll show that chart as well. You can see XLV RSI is really strong. Let's take a look at XLP, consumer staples, another area you would expect to be strong when the market, hedge funds, and so forth start to look for safety. You can see the strength indicator here, ADX, as well as continued highs on a 3-line break chart. And note the strength here on RSI. So what does all this mean? It means that you should be looking for stocks in these sectors with good setups if you're bullish, and if you're bearish, you might want to be looking at some of the sectors that are breaking down for shorts. Bristol Myers, the last time we looked at this, we were looking at this Kirby and this breakout level. If any of you traded this, congratulations. You got a nice 6-point move off of this. It took a little while, but we flagged out here in February and March, and moving higher towards the end of March. Obviously, you can see the Kirby tapered off substantially, and this move was very pronounced. If we look at the other stocks I mentioned, Merck, you can see MACD is a little hesitant here. We had this breakout. We're holding above the 20 period, the 50, and the 200. And you can see this Kirby level up above here. You can see a lot of volume being traded in this area right here. Pfizer, chart looks better. It's just holding the 20 period, continuing to move higher after this breakout of this level here. Johnson & Johnson, almost 13% of the holdings in XLV. The healthcare sector is Johnson & Johnson. You can see ever since we broke out of this range here, we came back to the 20 period once. I would suspect we might pull back to it in the near future. So if you're an investor, you might want to wait for that level before you trade this higher. Procter & Gamble is the biggest component of XLP, the consumer staples, at almost 14%. You can see that we're flagging sideways in here. So what you'd be looking for is what HCPG calls a base and break. We're basing here at these higher levels. Looking at the weekly, we can see that's a flag. So if we break higher, that would be a signal to go long. And if we break lower and come back down to the 20 period, I'd be looking to take this short. Coca-Cola, another component of XLP. You can see we put in a nice cup. I would expect to see a handle here. Look for stochastics is overbought and going to turn lower at some point, so I'd look for a handle and the possibility of something like this before we break higher and then out of this pattern. So put this on your watch list for a long-term hold. Philip Morris, PM, with a double bottom and a cup. We got a little handle here, and we're holding the 20 and 50 with stochastics oversold and moving higher. So this might be something to look at going forward. Walmart, stock that we traded off of this descending channel. This breakout here is where we got in at the 71.80 level and traded this up until we saw some reversal candles put in. Came back down, tested the 20 period, and now it's moving higher. So I'd look for this to break, continue to break higher. Let's take a look at the 5-minute, turn on our pivots. See now, this is a difference. See the difference in the 5-minute? Nice smooth line. Now these pivots are from last week, so coming into Monday, this might be a good trade for an indie setup off the 5-minute. SWI, Solar Winds. This is a green energy company. I'm watching this one for either a move back down to the 50 or to hold this 20 period and stochastics to turn. So this might be an interesting one to trade. Let's see what the 5-minute. Now the 5-minute is not a good setup for an indie, but I have Under Armour, which was something that was mentioned in the Day Trader Bootcamp chat room. We broke out of this pattern and this descending channel, and we broke out of this upper part. We held the 2050, and we look like we're going to move higher here. Looking at the 5-minute, we have a smooth. Watch this on Monday to see if this continues to move smoothly upward. In which case, once the pivots are reset, you might have an R1 set up here as well. LSTR is another stock that closed back above its 20 and 50 after this little sideways action. This is basically a base and break on a shorter term basis. this breaks higher, I would watch the trade this, note where your stochastics is. So you might get a breakout above 57 for a trade. And on the 5 minute, this is a little bit wishy-washy, but you might get this to smooth out Monday, Tuesday, Wednesday if this continues to move higher on LSTR. Federal Realty, we have note that Kirby and stochastics oversold here and moving higher. Something of an ascending triangle pattern that goes back a ways. So we do have higher lows, and we will break above this level at some point in time if the market doesn't roll over first. Intel is a bit of a messy chart, but I do see a pattern here where we put in these pivots. We broke above, we ran down along the upper trend line. Now we're back above the 20 and the 50. Stochastics oversold and starting to cross. So this might be a trade going into the week. Let's look at the 5 minute. Yeah, this looks decent. I mean, this might work depending on where the R1 resets on Monday. Okay, these are starting to smooth out. The whole idea of an Indy setup or 30-minute opening range, you want these moving averages to be smooth and moving up nicely to squeeze price in between the R1 and the moving averages. I'll give you a better example here shortly. JP Morgan, remember the XLF was weak and it was already turning down in a three line break chart. There's a possibility we could bounce off the 50 here, continue higher, and then fail and put in the right shoulder and then move lower. Potential is here though for a nice 2 or 3, maybe $1 or $2 move higher before we fail here. I'm not saying that we have to fail there with stochastics oversold, but with XLF showing some weakness, I would expect that that's a possibility, putting in the same pattern. Okay, but no, we're sitting right at the 20 period, so it's a very good possibility we bounce higher on XLF and take everything with it. Just something to consider. I never thought I'd say this, but believe it or not, YHOO is looking pretty decent. Has been trending up the 20 and 50s. The best action I've seen over the last 6 or 8 months, where it's just stair-stepping up, moving higher. We had a base back down to the 20, and now we're bouncing higher. Stochastics just turned over, and the 5 minute looks pretty decent as well. Nice, smooth, trending 5 minute. This is an example of what I was talking about before. As far as an Indy, you overlay your pivots, which is easy to do on free stock charts. You just add that indicator and go to pivots. Okay, right there, you click this, and then you add your pivot points. You can turn these off and on by just clicking and using the plot opacity to turn it off and on. But going into Monday, I'd watch to see where these reset and whether or not we'll have a nice squeeze in an Indy. Note where stochastics is, both on the 5 minute and the daily. Also, if you go to my StockTwits channel, I noted quite a few other setups you might want to check out. In particular, Applied Materials, which has a nice pattern. Okay, flagging, or rather, flagging on the daily, holding at the 50 period, and it looks like it might want to move higher. GWW, Granger, had a nice pattern, and we're holding above the 20 and just below the 50, or excuse me, holding below the 20 and just above the 50 with 2.32% short, and oversold stochastics and getting ready to turn. So this looks like a decent one as well. Granger, I think the 5 minute looks good on this too. And it's a little squiggly in here, but let's see what happens going into Monday and Tuesday if we get a nice Indy 30-minute opening range trade. JP Morgan, we talked about that. Shippers, remember these 3 broke out and moved higher during the week, and the only one that's left is TK and dry ships. I wouldn't trade dry ships, but I'm just saying that these 2 didn't move higher and get overbought like the other shippers did during the week. Okay, AET, remember we have Obamacare kicking in here, and no matter what your positioning is on same you have to consider the fact that premiums are going to rise. That cost is going to be passed on to the consumer, but the healthcare providers are going to continue to do well. So this is an ascending triangle pattern. I'm watching the 20 and the 50 period here and the stochastics. Also watch Express Scripts and United Healthcare, among others, for trades possibly during the week and the upcoming weeks ahead. Okay, so this is Cousin Vinny coming to you from Day Trader Bootcamp, where you can come and check out a 2-week free trial, meet some of the traders in the room, and learn to be a better trader. I posted a chart over the weekend. I posted a video over the weekend, which you can view as well, which is titled Becoming a Better Trader. And that's part 1. I'll cover some of the other things in part 2, like using Fibonacci's and Ichimoku, as well as some other techniques to make yourself a better trader, specifically geared towards newbie traders. Okay? Take care. I hope this helps, and we'll see you in the room on Monday.